Welcome everybody, this is Raghee Horner and we're going to officially start our discussion. I won't call it a webinar tonight because in a lot of ways, this isn't necessarily a presentation where I want you all to remain mute. I would love for you guys to give me some feedback and questions because this is less about a lecture of how to and more about a discussion that we're actually going to have for about the next 8 weeks. Okay, tonight being the first talk on the topic. And let me give you a little background without boring you to tears. But this whole discussion tonight, Evolution of a Trader, is going to be part of a series where we're going to discuss kind of taking the steps slowly into, I don't want to call it system trading because there's a lot of connotations about what it means to be a system trader. But in the definition that we're going to talk about here today, systems trading and utilizing not only custom indicators but expert advisors to really kind of keep your emotions in check, keep your bias in check, to really just make sure that you're trading what you see, trading your plan, not trading by the seat of your pants, okay? So again, it's going to be the first of a lot of discussions we're going to have on this topic, and we'll slowly delve into more detail as to the different types of EAs and the different types of custom indicators I'm in the process of developing, and they will be available to all of you. And also, when you're on your own journey of wanting to do this for yourself, if there are particular tools that you want to develop in a way that's going to automate some of your decision-making skills. And let me talk a little bit about that and talk about the 4 parts for this month, okay? We were going to dive right into EAs and custom indicators, and I thought, you know what, without proper background, I didn't think that we were going to be able to accomplish what I wanted to accomplish because, after all, I am a discretionary trader, okay? There's no question about that. I started off as a discretionary trader, and over the past year, I've been incorporating back into my discretionary trading a lot more automation. So let's head on over to the chalkboard, if you will, our Word document. For those of you that have been joining me on any regular basis, you know I am no fan of the PowerPoint. This is kind of our chalkboard here, okay? And if you have any questions, gang, I really do sincerely mean it. I'd like for this to be very much a discussion throughout this month, because what we're going to discuss in terms of what it means to, the different kinds of traders and that evolution, that path that we all take to what we hope will essentially be successful trading, okay, I think does follow a lot of the same steps. I think we might spend different parts of the journey in different places, but we're more or less heading down the same path, I find, when I talk to different traders all over the world, okay? All right, so first of all, let's talk about what it means when I say discretionary trader, because I think a lot of people just think discretionary traders have no guidelines, and I could not disagree more with that assessment, okay? I think most of us start off as discretionary traders unless we have purchased some sort of system, okay? And I know a lot of us start off that way as well. I did not, okay? So in terms of what we're going to talk about, discretionary trading, I'm going to define what I think it is. And I think proper discretionary trading might be a little bit more applicable. What's proper discretionary trading? You do have guidelines, okay? They may not be rules, however. Rules are a little bit more on the unbreakable side. Guidelines, I think for most of us, guidelines are what? They're bendable, okay? Now, discretionary trading, in my opinion, requires lots of discipline to your guidelines, okay? I think that's where the wheels fall off the wagon for a lot of us. because of the discipline that it requires. It'd be nice if I spelled discipline right. Okay, so by the way, gang, if you already haven't picked up by my tone, again, this is going to be a very relaxed discussion. If you have questions, go ahead and let me know what they are. Okay. So one of the problems with discretionary trading, again, is because the guidelines are bendable, all right, it requires a lot of discipline to follow your guidelines. I think we all usually have some sort of methodology, though, okay? I don't think it's systematized per se, but we all have a methodology, which is to say there's a particular strategy that we have, and there are steps to that strategy. All right, I've outlined in past webinars here during our IBFX Live webinar series on Thursdays my steps to swing trading. So for example, okay, let's use an example here. So swing trading. So the first step to swing trading, and again, keeping in mind that this is discretionary trading, but there's a methodology, there's a discipline, there are steps. So the first step is identify the trend. Now, you know how we do that. We utilize the 34 EMA wave. We discuss look back and clock angles. For those of you that have been joining me for the past year that we've been outlining all the details of my trading, you're probably already familiar with that. Now, swing trading, by the way, the word swing is, to me, synonymous with corrections. All right? So if I'm looking for a swing and I'm looking for a correction, to me, trends correct. And that's what I'm looking for, that trend. So then the second step would be I've identified the trend, okay? For an uptrend, I want to identify support, and for a downtrend, I want to identify resistance, because it's at these support or resistance levels, or what I call measured pullbacks or bounces, that I'm going to define a what? A swing, or that correction, right? So again, we're going through the steps, we're going through the guidelines simultaneously of what it means to swing trade. Okay, again, taking away this, I think, very judgmental view of what it means to be a discretionary trader. But again, I think one of the challenges to discretionary trading is the fact that, again, it requires lots of discipline. Every step of the way, we need discipline. We need the discipline to follow what it means to identify a trend. We need the discipline to make sure that we do our analysis and identify what that measured pullback or measured bounce is, okay? So then, once I've done that, I need to do what? I need to wait. I could possibly put in a conditional order for that buy or sell at the price level I feel that the uptrend will exhaust when it's pulling back, or the downtrend will exhaust when it's bouncing. So I could possibly put in a conditional order, but I have to wait for my price to be met. And again, that requires what? This waiting process. Of course, discipline, right? So I've identified the trend, right? I've then gone through the process of trying to figure out where those measured pullbacks or bounces are going to be. I'm going to wait for that pullback. And then finally, if it's met, that's the big part. If it's met, and what's it's? It means that price level that I'm watching. If it's met, then there's my trigger. There's my entry. All right? Now, what a discretionary trader would do is go through each one of these steps and basically fight emotion, the possible excitement that might be surrounding the market in terms of volatility. Okay? Oftentimes when you're waiting for these type of corrective entries, Corrective entries require patience. When you're waiting for a pullback to occur, it's so difficult oftentimes because it feels like it's never going to happen, that the market's just going to take off without you. Okay, so again, there's a lot of discipline that's required to say to yourself, you know what, my belief is that healthy trends correct, and it's on that correction that I will hopefully anticipate where the exhaustion will be and enter on that correction and therefore follow the trend. All right, so there's a lot of that bias, that impatience, lots of different things, making sure that we're cognizant of different news events, okay, etc. So there's a lot of, smaller elements that can affect our psychology. So what people do, let's start off with a custom indicator. What would a custom indicator do? Well, for me, let's go to the charts here for a moment. Let's start off with kind of the light version of what it means to automate. And by the way, when I talk about automating, okay, when I talk about automating, I'm talking about the analogy that would probably best be described as, how many people here in the room know how to drive a stick shift, a manual transmission? I do. I also drive an automatic car. But I wanted to learn how to drive stick shift. Well, both will get me where I want to go. Okay? It's simply that the automatic takes what the manual transmission does and makes it easier for me. It does it on my behalf. I understand what it's doing. It's going through each gear depending upon my speed, right? But it's just doing it automatically for me. I understand why it's doing what it's doing. It's not a black box to me, right? So when I look at, for example, this chart right here, the one that you have in front of you right now, and I look at, this is the daily chart of the Aussie US dollar, by the way. And just like every other webinar that we have, we're going to take a look at current charts. So if you have questions or if there are certain currency pairs that you're interested in a little bit deeper discussion, don't hesitate, okay? All right, so talking about the process of automation, I don't necessarily need grab candles. For those of you unfamiliar with the grab candles, it stands for green, red, and blue, and it color codes my candles according to where prices are in relation to the 34 EMA wave. So if anybody wants to download this custom indicator, okay, you can do so at IBFX at www.ibfx.com/tools/grab. Okay, and what it'll do is it'll overlay the 34-period exponential moving average on the high, on the close, and on the low, which are the red, blue, and green moving averages. And it will also color code the candles. So when the candles close above the 34 EMA high, the candles plot green. When they close below the 34 EMA low, the candles plot red. And when they close within the wave, within the 34 EMA high and within the 34 EMA low, in that space between the top and bottom lines of the wave, they go blue. Now, what this does, it gives me another layer of analysis. It automates a decision-making process that I would need to do on my own by looking at where the candle closes. But what it does for me is, at a glance, I can have a pretty decent idea, in my opinion, of the sentiment and the momentum of the market. Okay? So I still have an aspect of the classic candlestick on my screen. In other words, the light shaded green is an up candle, the dark shaded green is a down candle, or the light shaded red is an up candle, the down shaded red, like the light is up, the dark is down. So I have a little bit of that classic candlestick interpretation there, right? But I'm adding another layer by, again, that assessment of sentiment and momentum. So when I have more green candles plotting, what I then determine is that there is bullish sentiment, bullish momentum, and if the 34 EMA wave takes on an angle that I call the 12 to 2 o'clock, now I have a bullish trend. You're not going to have a bullish trend without a predominance of green candles. Bottom line. You're just not going to have that. I'm not going to have a bearish trend without a predominance of red candles. When the market goes neutral and begins to lose that bullish or bearish sentiment, we're going to have more and more blue candles plotting within the sideways range. Okay? So, again, do I need these? Well, again, part of the evolution of a trader, part of that transition from taking something that's very discretionary and adding a certain amount of automation to it, like the wave, like the grab, it's kind of like a baby step into, I think, systems trading to a certain degree. But what it does is it takes your decision-making process and I think removes a certain amount of bias. When I see a lot of green candles on the chart, it'd be silly for me to start to think about some sort of trade that's going to take advantage of weakness, because I'm going right in the face of, I'm going counter the dominant market trend. Okay, does that make sense to everybody? Is everybody with me so far? So in terms of making something blatantly obvious to myself, kind of like the speedometer on a car. I can look around and see how fast I'm going just by the way things are rushing by me, but it's that speedometer that gives me a good idea of, okay, I'm speeding or I'm not. This is kind of the same way in that I can get an idea of whether it's bullish or bearish, and I'm not going to fight the color. It's right there. There's no emotion about it. I look at it and I make a determination. Okay? It's discretionary trading, absolutely, but I'm adding what? Let's go back over to our chalkboard, if you will. You know, I wish they had like a chalkboard app. That'd be very cool, wouldn't it? Instead of using Word. But anyway, so that custom indicator, in this case, my 34 EMA wave and my grab candles do what? They help me. They don't absolutely do, but they help me remove bias, which is also the emotion, okay, from my decision making. Now again, you can download that tool, both those tools. It's a self-install at ibfx.com/tools/grab. All right. All right, so let me tackle a couple questions here that have popped up so far. And the first one was, when I talk about EAs, or what's known as an expert advisor, okay, now we talked about custom indicators. An EA, or expert advisor, is a tool that actually begins to take more of what you want the market to, or what a custom indicator to do for you, and begins to automate more of the trading process. You know, if you're looking for certain criteria to be met, an EA can not only give you the buy and sell signals according to those requirements that you've outlined, they can even go as far as actually executing the trades. You know, there's different levels of expert advisors. You can have ones that just will give you a signal. You can have ones that will actually go ahead and give you the signal and enter the trade. There's a number of them. But what they do is that really takes a step into, you know, full-blown automation. You can go to full-blown automation, either of your trades or simply signals. Okay? So, for example, there's gray and there's black box. For those of you that are unfamiliar with the term, gray means you can actually go in and tweak certain aspects of how the signals or even the automated trades are going to go about being executed. A black box, you cannot tweak. The reasoning may have been explained to you, but the details you will not be able to see or change. Okay? And let me preface all this by saying I am not a lifelong systems trader. There's part of systems trading that appeals a lot to me. And the cool thing about this, you know, all my cards on the table, I'm actually looking, just at this part of my trading career, these types of experiments, these types of journeys for me are what keep it interesting. Okay, so I'm kind of sharing with you this process of kind of my adventure into a little bit more systems trading, systematic trading, custom indicators, and over the next 2 months as I develop some of my own, I'm going to be going through that process with you, for hoping that when you go through it yourself, you're kind of a little bit better prepared. So I'm going to be working with a programmer and sharing with you what the details are of what I'm looking to create for myself and eventually for you all to use if you choose to do so. Okay? And also the challenges that I'll run into, because at some point the bottom line is the best system, the quote-unquote best system, is the one that you create. It's the one that you have determined what the criteria are, in my opinion. Because the bottom line is, if you buy a system, let's talk frankly here for a moment. If you buy a system and you are not privy to why the signals are being thrown out there, or even if you are, if it's a gray box and you can only tweak, at some point, because you did not make it, if and when you run across that time of inevitable drawdowns and you don't have clarity and transparency as to what this thing is doing, what it's trying to take advantage of, why it's signaling what it's signaling, you're going to lose faith in it and you're going to stop using it. Okay? I also, one of my big problems with systems, one of the reasons I avoided them for so long is, there's really only two kinds of, well, if you think about it, for the most part, there's two kinds of systems. Ones that try to take advantage of a trend, and ones that try to take advantage of exhaustion. And the problem is, a trending system is going to assume that every move is a trend, higher highs and higher lows, or lower lows and lower highs. Okay? Exhaustion type systems are going to think every new high is an opportunity to short into the move, and every new low is an opportunity to buy. And we know that at times each one could be right, but it's which one do you go ahead and utilize at different times. That's where understanding market trends, I think, adds a whole other dimension. What if you, and these are the things that I'm asking you, I don't have all the answers for sure, but these are the things I'm asking myself and asking you to think about. What if you knew what the market trend was? What if you can say, wow, I've got a predominance of green on a chart, and that means I'm probably dealing with a trend. What if I deploy my trend trading system, my trend trading EA, or a trend trading type custom indicator? What if you start getting more blue? You're getting reds and greens, but you're getting a whole lot more blue candles on the grab. What if you say to yourself, wow, this market trend might be transitioning to some sort of sideways market. Maybe I'm waiting for a breakout or breakdown, or if the range is high enough, I could take advantage of exhaustion. Okay, and I've simplified systems. Obviously, there are ones much more sophisticated, but we need to start with a basis, and this is a good place to start. So what if you could understand what the underlying market environment was doing and then deploy the quote-unquote appropriate system? Okay? So in terms of EAs, I would say that's probably closer to the system side of things. Custom indicators, I think, can be, like I mentioned, more like an automation for discretionary traders. Okay? Now, if you go into some of the new EAs which allow you to determine which signals to take, that's where we talk about the automated signals, but it's your choice as to which to take. I think it still comes back to our big what if question, which was, what if you could understand, you could measure the market trend? What insight would that offer you in terms of what type of system to use, what signals to take, and so forth? Okay? So again, getting back to the live chart there for a moment, let's take a look at Let's take a look at the Euro US dollar. Now, when we talk about the evolution of a trader, by the way, a lot of you know, I've talked about this a lot, that when I first started trading, it was pen and paper and black and white bar charts, not even candles, black and white bar charts, daily charts at that. If I wanted to utilize some sort of indicator, it was one that I calculated either by hand or with a calculator. Okay? Did that for years before the internet became a viable place to do charting homework. In fact, I had a satellite fed computer, a DTN, some of you might be familiar with that, for some time, and that was the first foray into intraday time frame, intraday data, and automated, more sophisticated indicators. Before then, it was simple moving averages, momentum indicators, things of that nature. Okay? So, the evolution for me went literally from pen and paper to computer. So a lot of my pen and paper habits, the simplistic nature of the kind of tools that I had access to early on in my career, certainly have carried over even into today. Okay? So when you look at a chart, and for example, let's look at the current state of the Euro US dollar. And by the way, for those of you wondering, when do I shift my opinion? There's three aspects to a market analysis: sentiment, momentum, trend. If you have sentiment and it organizes, in other words, continues, it will create momentum. And if momentum organizes and continues, it will create a trend. Sentiment and momentum can be measured by the grab candles. Again, this is an EA. I'm sorry, this is a custom indicator, not an EA. I'm still making decisions on my own. In fact, this isn't even a signal tool. It's more of an analysis tool, right? So in terms of when I might make a decision about when a market has gone bullish on the sentiment and momentum, I'm looking for a green candle. The more green there is, the longer it has been bullish, and the more likely it is that that organization is going to turn into a trend. The way I determine the trend is by looking at the angle of the 34 EMA wave within the look back, within that specific amount of data appropriate to that time frame. Okay, and again, for those of you that are hearing some of these terms the first time, our webinar is going to build upon one another so that I can continue on with the discussion. And we do make these webinars available at the IBFX channel on YouTube. So if you were to head on over to youtube.com/interbank FX videos, you'll be able to see some of those playbacks on YouTube, okay, and kind of catch up. So it's the culmination of green grab candles and then the angle of the wave that will give me the assessment of the trend. When I go red for the first time after a succession of green, like we did back here, okay, I do know that sentiment has shifted, momentum has shifted. Now I look to the wave to see if the trend has shifted. Okay, this is not a very slow or insensitive tool. I think it's fairly sensitive. Okay. And what you can do by using these tools together is make, I think, quicker decisions about the trend without necessarily getting too much of a quick turnaround when the trend is simply correcting. One of the challenges for very, very sensitive tools is that if they adjust too quickly, if they're too sensitive, what will happen is that you might exit a trend prematurely. Okay, and some people might think that this tool does the same thing, but for my purposes, I think that from my testing and use of it, it provides just the right amount of support for uptrend, the right amount of resistance for downtrends, and therefore allows me to stay in a trend without having to take too much of a reversal, too much of a bounce in a downtrend or too much of a pullback in an uptrend when in fact I could be shifting my opinion of the market sentiment and momentum. Okay? So let's use a current example. Okay? Again, we're talking about that jump from discretionary trading to implementing some custom indicators that help the process of analysis be a little bit more automated, not taking the decision-making process away from you, but automating some of the analysis. You know, another good example of this, of a custom indicator type approach, would be things like the PRS for automated chart pattern recognition, the CPR for candlestick pattern recognition. Okay? So I think it's really important that we go through these processes. You know, technical trading. If you think about it, technical trading, if you start relying on indicators, is doing what? You're letting a stochastic or a commodity channel index or a moving average help you make decisions about the market, about whether or not it's overbought or oversold, whether or not there's going to be support or resistance. So technical trading, to a certain degree, is adding a layer of automation to your discretionary trading, correct? And some of you might take that next step and say, you know what, I want a system based upon this indicator that tells me when to buy and sell. But at some point, you have to have a discretionary understanding of what that tool is in order to automate it to whatever degree you want, whether it be simply signals or whether it be full-blown trading automation. All right? So in terms of what the euro-US dollar is doing right now and how I would view this. And by the way, it's not a matter of, at this point, you know, we can talk about the fundamentals here all day long. Let me inject a little bit about fundamentals here, because those are kind of the wild cards to price-based, technical, or even systems trading. I respect fundamentals, without a doubt. I'd be a fool not to. But if you look at a piece of news without considering the degree to which it's been discounted, okay? So what is the news surrounding the euro-US dollar right now? The news surrounding the euro-US dollar right now is, at first, we had that run-up, if you recall, towards 4,000, 1.4000, based upon Trichet saying that come April 7, come the next meeting for the ECB, he will consider a rate hike. But then he also laid out the guidelines to which a rate hike would be something he would consider. And predominantly it was inflation. It was a way to combat inflation. I don't need to be a genius in economics. I don't need to be a student of the ECB or Jean-Claude Trichet. I just need to know that there's an idea out there, rate hike, and there were some conditions that need to be met, namely inflation. The market rallied because what did it do? It discounted or baked into the cake, and let's zoom into this chart here. It baked into the cake the idea, the expectation of what? A rate hike. He didn't do anything. He just alluded to the fact that he would strongly consider it, and people immediately began to reflect within the price a rate hike. All right? That's the way news works. The best way to understand news within the context of price is this. If you're a chartist like myself, if you rely on price action, your belief really has to stem somewhere from an idea that economic data, fundamentals, and news are built into price action, which is just another way of saying discounting. The market, every market is a discounting mechanism. To some degree, it's doing what? It's reflecting the expectations traders have about what the market will do. Okay? So if people are expecting that the euro is going to be affected by a rate hike, and that in fact strengthens the euro over the US dollar, we have the move higher based upon what? Sure, it's a push from buyers and it's momentum higher, but it's fueled by this idea of a rate hike. My opinion is this. I am never going to assume that my idea is original when it comes to economic news, data, whatever, that it's unknown. I'm never going to assume that I'm the only one that knows it, and I'm certainly not going to assume I'm the first one reacting to it. Again, when it comes to fundamentals, I'm never going to assume it's original or unknown. I'm never going to assume nobody else knows it, right? I'm never going to assume I'm the first one. I'm going to assume at some point someone somewhere has been discounting this data and it's reflected in the news. How will I know if it's being reflected in the news? Well, first of all, you've got to make an assessment about whether that fundamental piece of data is bullish or bearish. And as simple as that might sound, it is not. Okay? Looking at a piece of news, reading an article and saying, yep, that's definitely bearish. Trust me, somebody else out there may think it's bullish. So there's no way to, some things like a rate hike, that's different. I think most people agree that higher interest rates typically mean that the underlying currency of that country is going to be benefited. However, when we talk about the rate hikes for the euro, there's a lot of people not necessarily feeling it's a bearish thing, it's not, but they think it's a bad idea because of the tenuous relationship currently by a lot of these banks in Europe and a lot of these debt-laden countries. What would a quarter-point hike do to the interest rate, the lending rate, to these countries that are literally borrowing millions and millions and millions of dollars? It adds up. And it could put a lot of strain on these countries that we already are hearing are just burdened by the weight of these loans, right? So if inflation was the reason that he was citing for taking action April 7, and if you notice, a lot of the data coming out right now affecting the euro and the EC and the eurozone, the EZ, is actually not right now incredibly inflationary. So what's happening now is traders are saying, well, we know that he said he'd act, but he's not going to act unless there's inflation. And we hear more and more about this debt crisis affecting Europe, and we know that a rate hike by the ECB would only make this worse. Maybe he's not going to hike. And look at the way prices are coming back down. I am putting those ideas out there. I'm thinking about these things, but until I see price reacting to them, it doesn't matter what I think. There are a number of bullish and bearish fundamentals that could be swirling about any market simultaneously. Our job is to discover which one is being discounted the most. Okay? The custom indicators, like my wave and my grab candles, are telling me right now that the overall trend on the euro-US dollar is up. And therefore, this move lower is not a reversal of the trend currently, but simply a correction of the trend. And therefore, as prices reach this sweet spot between the 20-period simple moving average for me and the 34 EMA high, I'm actually looking at a swing buy zone. I'm actually looking at an opportunity to get long here. Why? The momentum and sentiment, I believe, is, for the most part, predominantly still up. It's still bullish, is what I should say, despite the pullback on the daily time frame. The angle of the 34 EMA wave is not only offering support within this uptrend, but it's also reconfirming that I feel that there is a markup cycle, that there is an opportunity to buy into a pullback. So that sweet spot again is that 20-period simple moving average and the 34-period EMA on the high, which is the white line is the 20-period simple moving average, and the green line is the top line of the wave, which is the 34 EMA high. Okay? So in terms of what I'm exploring, as a discretionary trader, I'm curious, and this is where I'm curious, because it actually all started off with an interview that I did with an author who asked me, and this is why, again, I got curious. I got asked by Sunny Harris, some of you might know her. She asked me, have I ever taken my discretionary tools and automated them? And I said, no, I never have. She goes, have you ever thought about it? I said, to be honest with you, I thought they were so discretionary that I may not be able to. And she goes, nope, just about anything can be. You just need to find a programmer who you could explain the ideas to and make it happen. I said, really? She goes, yeah. So I got curious, nothing more, nothing less. Because someone I respect, someone who I think is extremely intelligent, said, you know what, you should give it a whirl. And some of my greatest trading discoveries have been by the prodding of either students or fellow traders. So, you know, why would I close a door without at least seeing what's inside that room? So that's where this curiosity came from, and that's where the next 2 months I'm going to be sharing this journey with you, while at the same time teaching you how I trade, as I'm trying to automate this process into an EA. And also we can take a look at what's happening in the live market simultaneously. So I think we can cover a lot of bases at once. And even if you're not into custom indicators or EAs, there's still a good viable discussion here for you if you're absolutely happy with your discretionary ways. I am not recommending one over the other. I'm just sharing a journey with you, a journey that was prompted by a trader, and Sonny Harris happens to be a very smart programmer. You know, it's a question someone posed to me. I thought, you know what? Why not? I've been at this for 2 decades. I've never really delved into this. Why not? And if it works, I can help a lot of traders with it. You know, so it's an unknown, really. I'm in the process of. That's the exciting part. Okay? So, by the way, for those of you that are watching this live, we do record this, but for those of you that are watching this live, there is a chat window. So if you've heard me clickety-clacking away, I've been typing this into the chat window. If you look at your GoToWebinar platform, you'll see there's a chat window, and that's where I've been typing in the links and some of these things that we've been talking about as we progress with this webinar. Okay? So here is where I'll be looking at a potential swing buy. Now, for those of you that have been following me at other sites and other places that I write and present, you know that I had a swing buy, actually the 4th set of swing buys along this uptrend in the cable. So what happened here? Let's take a look, and I'll talk you through this whole thing. Once the candle started going green, I had what? Bullish momentum, sentiment and momentum. That organized into eventually a 12 to 2 o'clock angle of my 34 EMA wave. Now realize all these decisions are discretionary, yet the visualization of this custom indicator helps me, I think, stay focused and a little less, unbiased in terms of my analysis. That's what I think every discretionary trader should strive for. Even technical trader. Use the tools, whether it be technical indicators or, in this case, a custom indicator, to help you make your discretionary decisions with what? With more consistency. That's what, say, the market memory and look back are about. That's the grab candles and wave are about. How do I add consistency into my discretionary trading? And we talked about the steps earlier, the steps of my trading. And we talked about, as an example, swing trading. Well, the steps help me do what? It helps me stay disciplined. It requires discipline, right? But the steps help me do what? Create an environment of consistency. Okay? So if you're wondering, well, why do I bother doing this? I'm happy as a discretionary trader. Well, again, consider what consistency would do when you found that recipe, that formula. Right? What if Coca-Cola just winged it every month and said, we know more or less what Coke is supposed to look like. It's brown and it's bubbly. Let's just we'll wing it. There would be no consistency. Why is McDonald's so successful? Because they make a great hamburger? That's arguable. What they've mastered is, no matter where you are, New York, Florida, Texas, Washington State, when you walk into McDonald's, you're going to get pretty much that same hamburger. It's consistency, right? They have a recipe, they have a formula, and they follow it, just like Coke, just like any successful company. So it's that formulaic approach. We're still making decisions as to whether or not we're going to take a trade. We're still processing the price action manually. We're trying to add consistency, trying to remove bias. Okay? So back to this cable trade here. So again, for those of you that follow me on the myriad of places that I am on the wave, on the web, and discussing the wave for this cable, you know that I've been looking at, this will be the fourth set of swing buys. And if you've been following me, you also know that I've been very leery about these last two entries because we're getting very toppy here on the cable. In other words, we've been finding a lot more resistance. The pullbacks are coming more frequent. Even though we're in the context of an uptrend, the ceiling here really is spoiling the party for upside follow-through. So I know I still had, and I don't have it any longer, but I had a majority of green candles. No blue, really, just a couple of blues here and there indicating neutral markets for a brief amount of time as we pulled into the wave within the overall uptrend. Okay, but this last one, I was very hesitant because as we get closer and closer to the slippery slope that is the area between 6,200 and 6,300, the follow-through has been tougher and tougher to come by. So if you've been following me, you knew that this was an entry that I was not crazy about taking. Again, that sweet spot I talk about, the aggressive corrective level of the 20-period simple down to the more conservative level of the 34 EMA high, kind of creates an area. If you notice, here's a 20-period simple, here's a 34 EMA high. Again, that sweet spot I was talking about. It's a swing buy, okay? In that area, we bounced back. I believe the entry was 61.50. And I mentioned that if you were able to carry prices up higher to 62, at least take a little bit off the table here because now we're entering the part of the climb where the rocks get really slippery. You know, the slippery slope, it gets more hazardous because we're in that rare air up here, the thin air, where things tend to go badly pretty quick. Okay? So what happened? We rallied up. We actually made it up to 62.42, and then boom, look what happened. We actually closed below the bottom line of the wave and got our first red candle. Okay, our first red candle since really back the first week of January. Has the momentum and the sentiment and momentum, have they shifted in this market? According to my grab candles, yes. First significant bearish shift in sentiment and momentum has occurred. The last time we were red, again, was January on the daily chart. Okay? Can I remain bullish here? Well, when you couple the ceiling with the fact that the wave is starting to lose some of its angle and the fact that the support of the wave has now been broken, I'm not a bull any longer. Now, please don't make the error of saying that if I'm not bullish, I must be bearish. There is that neutral, do-nothing part of the market, which is where we are right now. I'm not automatically looking at a downtrend because why? Well, my third element, my 34 EMA wave, my third decision, sentiment, momentum, trend. My third element, I don't have a 4 to 6 o'clock angle of the wave yet, do I? Okay? I do not have a 4 to 6 o'clock. So I'm not bearish. And again, please don't make the error of either being bullish or bearish. You can be neutral. It is a perfectly great place to be. Just as if a lot of people feel if they're not long, they must be short. Flat is a position, okay? Neutral is a market opinion. All right? So this is the first time that I'm really starting to consider whether or not the cable has the possibility of rolling over. Now, for those of you that are aggressive and have been with me in past webinars, you know that at this point, if you wanted to, there is an entry style that I call the wave reversal, the wave CCI reversal, that if prices break the wave, here we had a nice healthy uptrend and prices broke the wave. If I have a negative 100 CCI or greater, I can actually take what would be an aggressive trend reversal entry, and I could short on the break of the 34 EMA low. Okay? And that criteria again would be that the trend reverses not because the angle of the wave has changed, but that the trend itself has been broken. So this is kind of a very aggressive trend reversal entry. All right? So as we look to candles breaking the bottom line of the wave, I'll go down to the CCI and see that, yep, we're negative 100 and greater. This would be a very aggressive short entry. Okay. Now, are there places you can take there are other places I can take advantage of this shift in momentum? Sure, I could look to intraday time frames like the 15 or the 30 and look to short those short-term time frames. Now, the directional bias is something I take using the grab and using the wave. Okay, so again, this is discretionary trading using these custom indicators. Now the directional bias for the first time really has gone to questioning the uptrend. Is my wave still heading up at 12 to 2? Arguably yes. Not as firmly as it once was, but it arguably is. So if I'm going to trade counter trend, if I'm going to get short, I want to do so in very short-term time frames. And these are all going back to this idea of having guidelines behind your trade. Okay? They all require discipline to follow. But what I'm trying to do is have a methodology by which there is consistency and I'm able to remove some of the bias, some of that emotion. Okay? So I don't want to get too far away from our topic here. So what then is systems trading? If I have a discretionary methodology, using whatever tools it is that I have. In this case, you guys know I have a very heavy reliance on psychological levels, certain moving averages, the wave, grab candles. I love Fibonacci. Okay? If I could take those tools, program them into code, and then when certain criteria are met, the expert advisor would then say, here's a buy entry, here's a sell entry, or whatever it is that I program it to do. The expert advisor then can take the mind of a discretionary trader and to a certain degree automate it. It can take a manual transmission and turn it into an automatic transmission. Okay, and again, I'm keeping things very simple, but that's the basics of what it means to make the jump to systems trading. But what I hope you'll see is that it's my opinion that in order to make that leap to systems trading, you've got to have some sort of set of guidelines or discretionary rules that you find work to turn it into a system. Otherwise, what's going to happen? You won't understand what the inner workings are of your system. And I already talked about the pitfalls of that, right? I think it's best for you to understand why it is your car is shifting. I've hit the accelerator. I need to go faster. Car is going to shift. You don't need to understand the mechanics of the automatic transmission. You just need to know why. That to me is enough. Okay? That's my opinion. I don't need to know how an automatic transmission works. I just need to know why it's going to do what it's going to do. So that's kind of the background as to why I'm making this, why I'm doing this experiment. I don't know that I'm going to become a systems trader. I doubt it after 20 years of being a discretionary trader. But what if I found certain aspects of my trading that I could systematize and that would run alongside my discretionary trading? It would be an interesting way to do what? I think in my mind it would be a very interesting way to, in some ways, add another element to my trading that doesn't require me being behind my desk. I love that idea. Okay, and because it is a reflection of me, I know why it's doing what it's doing. In fact, I could even go so far as to shut it off when the system is not in the environment that it is programmed to take advantage of. So if I somehow find a way to take advantage of my grab candles and have a trend trading system, and candles go blue on my grab on the time frame that I'm trading, I then understand when to override and say, you know what, this is not the environment this thing was designed to thrive in. That to me is a very interesting mix. That's what I'm really curious about exploring over the next 2 months. Okay. All right, so let me tackle a few of the questions here that have popped up. And again, the basic, foundation I wanted to discuss today was, this evolution that I'm undergoing, some of you might be in a similar situation in terms of your own trading. I will say the next 2 months, though, are probably going to require, if you're going to join me here, they're probably going to require that you head on over to that YouTube channel and play a bit of catch-up. Okay, so if you head on over to youtube.com/interbank FX videos. Okay, I'm putting that on the chat window there. It'll be a great way for you to catch up on my entry styles. Okay, so you'll learn about swing trading, you'll learn about momentum trading, you'll learn about what I call wave reversal, okay, as well as what I call fading, distribution fades. You'll learn about the 34 EMA wave. Okay, you'll learn about grab candles. All right, so a lot of that information's there. If you don't already follow me on the Daily Trading Edge, I not only try to analyze the market, but give you a little bit of educational, informational background as to why I'm making these decisions. My goal, my friends, really is to be as transparent as possible. There is 100% not a single tool that I use that I will not either tell you where to get, how to calculate on your own, or have a download for you available. Okay? Daily Trading Edge, for those of you that are unfamiliar with that, is a blog that I keep at Interbank FX, okay, as their chief currency analyst. They give me a lot of leeway as far as talking about my own trading. One of the neat things we do, without tooting my own horn, I'm certainly not trying to put anybody else down. I'm just telling you this has always been the way I like to talk about the markets. I don't like looking backwards. I don't like talking about what has happened unless it's going to be a part of the discussion of what will happen. I like to tell you about what I'm doing in the market. So rather than this general, faceless, pedestrian kind of look at this is what happened today, I want it to be personal, okay? And they've really given me the luxury of doing that. Our analysis at the site, I think, in my humble opinion, is very different than other analysis because I talk in the first persons about what I see and why I see it. And again, transparency is what I'm all about. I want you to know how I came up with this decision or how I came up with this analysis. And you'll have access to the tools that I do it. In fact, today, for example, I talked about the dollar Canada. And not just the fundamentals surrounding $100 plus a barrel crude oil, but also the fact that we've reached a significant 3-year low on the pair, and what you can do possibly to take advantage of the bounce that we've been seeing today. Okay? So let me finish the discussion about the cable. So what happened? Well, one of the things that I had discussed, again, for those of you that were following me on that particular trade, so there's a number of places that I discussed this. One of the things I mentioned was once we hit 62, that was an initial target. Once we hit an initial target, anybody who's joined me for these IBFX Live webinars or read any of my books, once we've hit an initial target, your trade management kicks in. We go from the risk-based stop, we trail it up to a trailing stop. And that's when I had recommended that we move that 60-90 stop to 10 pips below our entry. So when prices came back down, it was at worst basically a break-even wash on the remainder of your position. Okay, and again, I was more aggressive about all this because we were so near that slippery slope of 62 to 6,300. Okay? This indicator I use on any time frame. I use on every market that I trade, stocks, futures, forex. Okay? And it's about measuring psychology is really what it is. Okay? All right, so again, I hope that this has shed some light on what we're going to be talking about over the next 2 months. I realize a lot of you here might be hearing about my trading entry styles for the first time, and to those of you that join me here and I might have left in the dust because it's the first time you're joining me here, my sincere apologies, but we do make the resources available. I don't know of anybody who makes all their trading methodology and tools as freely available on the web as I'm able to do through Interbank FX and my other personal sites on the web. So just Google me and you'll get all the information you could possibly want, to the point that you'll probably be sick of me by the time you go through it all. Okay, anything I do at some point is available on the web. All my strategies, all my tools. And I'm trying to make a home base here, basically at Interbank FX. And we have some very cool things planned for the rest of the year. I'm hoping once we get some framework around them, I can start sharing with you what they are. I'm very excited about them. So whether it be the grab, whether it be the wave, just give it a Google and you will get the information you need. It's also at the YouTube channel. Okay? As far as the wave being reliable in other markets, yes, I do, but I think it's more reliable in a 24-hour environment like the Forex or futures contracts that have a very much more active Globex session, for those that are curious. I saw a question came up about stocks. Yes, I do apply it to that, but I think it works best, as most technical analysis does, in my opinion, in the Forex market. Okay? All right, so this presentation has been recorded. We will at some point have it available at the YouTube channel, but we will be talking about this subject for the next 2 months. Okay, this will be a kind of a process by which I'm going to be sharing with you not only the entry styles that I'm talking about, but also the process by which you might make that jump from discretionary trader to maybe technical trader to possibly even systems trader. By the way, I kind of look at discretionary and technical trading often in the same light. I just think that technical trading is a little bit more specific to indicators, while discretionary trading has a connotation of not being as indicator reliant. So I'd say my trading is somewhere in between discretionary and technical. It's probably discretionary technical trading. Okay, there's always hybrids, and that's probably about where I am right now. All right. Again, thank you so much for joining me. I hope this journey that we're going to be taking together is as interesting for you as it has been for me. I'm very excited to be sharing it with you, and you guys are going to be basically seeing it blow by blow as we go through this process. So in the meanwhile, I will look forward to seeing you all next week. Okay? And in terms of a couple questions here, let me go through a couple of these here. In terms of keeping an eye on what I'm doing day to day, Suresh, you can do so right at ibfx.com. Right at the home page is a link to the Daily Trading Edge. Also, my YouTube channel would be a great way to do it. The first video, you know what? I would just say go through what interests you. That was your question, Debbie. Just go through whatever interests you. I don't think there's any particular place you have to start. All right? We're going to be actually releasing a compilation of daily trading edges that are a little bit more educational in their content, and kind of creating an ebook. And it's going to be a free ebook that I'm hoping is going to be available on the Kindle, as well as just a PDF. And that's something we're going to be making available very, very soon. So that'll be a nice place, almost like a little book for you all to be able to take advantage of some of what I think have been the best of the Daily Trading Edge. So that'll be coming up very, very soon. Any market that's thin, Minion, great question. You always have some super questions. Any market that's thin, I think any indicator, any analysis is going to be problematic. Any thin market, any illiquid market, it's going to be difficult. And the EMA wave, of course, would suffer in that environment as well. Absolutely. Brad, thanks for the kind words. I appreciate it. I agree with you. Black boxes are a dangerous cube waiting to explode in your face. That's a great analogy, and I can't say that I disagree with you. Again, my opinion, but I agree with you there. As far as Fibonacci and my use of the wave, Tom, the Fibonacci settings are, the wave settings are actually based upon a Fibonacci number, 34. Okay. As far as the software or the EAs, I'm going to be doing it on the MT4 platform. There'll be MT4 code is what it's going to be. Okay? And again, thank you so much. My name is Raghee Horner. I'm the Chief Currency Analyst at Interbank FX. I hope you've enjoyed the presentation. My goal is to keep this interesting and keep them succinct. I don't want to waste a moment of your time. So again, thank you very much for allowing me to be your teacher for the past hour. I never take that lightly, and I hope you've benefited from our discussion here today. So again, I will see you all hopefully next week, okay? All right, take care. Well, that was a while ago, but I've been basically rolling around the house in the chair, so I really haven't put any weight on it.